Hello, welcome to today's Market Snapshot with myself, Jasper Lawler, the Senior Market Analyst here at LCG. Today we're going to look at oil just because there was a big move higher in the markets yesterday which had a lot of people calling for a breakout. The trend is higher, as we'll see in the Brent crude charts in just a moment. So people waiting for this breakout, but to our minds it hasn't quite happened yet. The trigger yesterday was a bit dubious. We had some comments from Mohammed Barkindo. He's the leader in the head of OPEC, which obviously is the cartel of nations, mostly in the Middle East, who have recently agreed to cut production, reducing the supply glut in the oil market, and that's what's been pushing prices higher. So he said that the compliance with these cuts has been strong. Mostly it's been Saudi Arabia leading the cuts, cutting more than they promised to. But just the fact that Barkindo said that compliance is going well, probably not enough in itself to really justify a breakout in prices. So we're going to analyse the price chart now and have a look at what his comments and any further information in the industry could mean for this price trend. As per normal, this is the weekly chart for the price of crude. We've seen it plenty of times before. It hasn't really changed too much because there's been a very tight range in these weekly candlesticks, as you can see along here. And the question was, had we broken out of that tight range? It's worth mentioning that we're very overbought on a weekly basis and that the RSI has been in a bullish, choppy range. So there's a risk here, as I think we mentioned on previous occasions, that we roll over to the bottom half of this range, and that could take us down to the 50-week moving average. But that's not what we're looking at the moment. We're looking at what got people excited yesterday was the break from this triangle pattern here. So there's a longer term line there, and I'll show you in the short term chart there's a shorter term line here which we broke above yesterday. Now again, even on the daily time frame, we've been in a consolidation here for a few weeks, but the overall trend is higher, as suggested by the shorter term moving average being above the longer term. So we're looking for a higher breakout, but we haven't quite got it yet. If you can see here, this was yesterday's candle, something akin to a shooting star formation where the market really pushed higher but finished well off its lows. In fact, it gave up more than half the day's gains from open to close. Now, if we drop down to this 4-hour chart, you can see this breakout a little bit better. Here's the trend line here. We had the third touch, didn't even get as far as the moving averages and pushed to the top side. This was the break. We got pretty high, but as you can see, we reached these old peaks over here and the market's rolled over again. And you can see we've given up this short-term support level. And as we speak, we're toying around with the short-term moving average and this broken declining trend line. Now we're down below it on a short-term basis. It doesn't bode well at the moment, and our suspicion is that we could see the market roll over further to the downside because basically we're still in a range and people are selling the top of the range instead of buying the breakout. So should this continue, should this down break continue from here, the next support that we'd probably want to see breaking is this one here. Should that get taken out to the downside, then we could be eyeing up a move down to this price level around here, which is about 55.30 on our price chart, slash the bottom of this longer term rising trend line, which is in and around 55. Worth mentioning perhaps just while we're at it, that we're looking at a candlestick chart here, but can sometimes be useful if you just change the chart type to a line chart here. And you can see this was our line based on the highs on the candle chart, but if you drop down here, this is the lines based on the closing levels. And as you can see on a closing basis, we're nowhere near breaking above the highs yet. Okay, that's it for our market snapshot for today. We were looking at the oil market, bit of a fake out in the oil price yesterday. That move higher is not getting sustained and we could be pushing down into the bottom half of the range here. That information for Barkindo from OPEC, not enough really to justify the higher prices. That's it, as I said, for today. Make sure to subscribe to our YouTube channel to get the videos as they're posted each day, and check us out on other social media channels.